Good day, ladies and gentlemen. In this particular video, I want to teach you something very important, and it has to do with a very common and popular forex advice that it says that you have to risk about 1 to 3% of your account balance per trade. Okay, so I found out that a lot of traders usually misunderstand that advice. It's a good advice, but they misunderstand it in the sense that someone with an $100 account balance, for example, let's say you have $100 as your account balance. Now 1% of that is $1. So someone that wants to follow that particular advice strictly would probably risk $1 in a particular trade. Now once the person is risking $1 in a trade excuse me, the person is risking $1 in a trade, then the person sees another setup on a different pair which is equally good, okay, which fits the criteria of his trading style, his trading strategy. The person will not want to take that trade. That's one mistake I see a lot of traders doing. Okay, person will be like, oh, I'm already risking $1 in one trade, on one particular trade, so even though the setup is exactly like my own setup, the person will not want to take the trade. But that's wrong. Okay, you can risk up to 10%. Okay, you can risk up to 10%, so long your account balance is such that as you're entering those other trades, it won't like the broker won't send you a message that you don't have enough money and all of that. Okay, so you can risk up to 10%, but the only thing that advice is telling you is on a singular trade, don't risk more than 1%. That's what it means. It does not mean if you see a good setup on a different pair, you should not take it. Okay, I for one, I can take, you've seen the way I trade. Sometimes I can have like 5 positions open or 5 positions pending activation. So on those 5 positions, each one can be about a certain percentage that I am willing to risk. All together, even if I risk, let's say I'm risking 1%, that's 5% altogether. Okay, does it make sense? So don't limit yourself to 1% per trade and say, oh, because you have already risked 1%, you don't want to enter another trade, and you're waiting for the 1% you've risked, you're waiting to see the outcome of that particular one before you go ahead to take another trade. No, you don't need to wait for that outcome. In fact, the more you take, if you take like, let's say 6 trades, that means you are risking 6%. Some might lose while others will also win. So there is not much difference in you waiting for a particular outcome. When you've seen the outcome of that particular trade, you will now be looking for a new setup, whereas a new setup presented itself in another pair while the first trade was on, but you didn't want to take it. So I hope you understand where I'm coming from, where I'm going to get. So a lot of traders make that mistake. If you see your setup and you've already risked 1%, risk another 1%, so long it's a different pair. Okay, both of them are not the same, it's a different pair. So go ahead and take the trade. While that trade is running, if you see your setup again on a different pair and it fits the criteria, go ahead and enter. Okay, the only time you start applying caution is if you've already entered like 5 trades and you're already getting to like 5%, 7%, 8%. You don't want to be in so many positions. Okay, so that's when you can calm down and wait to see the outcome of all the trades you've taken, probably 5 trades or 6 trades, each one being 1% of your account balance. You understand? So that's one mistake I see traders make, and I felt I needed to talk about it. Okay, so if you got value from this video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.